Hey there landlords, do you want to run a profitable rental portfolio? Well, good bookkeeping is essential, and that means tracking every single deductible expense and running reports to make smart investment decisions. But what exactly is good bookkeeping? Now, in today's video, we'll cover the 8 bookkeeping tips to simplify rental accounting, reduce the errors, and breeze through tax season. Stick around till the end and we'll show you exactly how Landlord Studio can automate most of this process for you. Let's dive into tip number 1. The first golden rule of bookkeeping: never mix personal and business expenses. You must set up a separate bank account for each property, and this makes it easier to identify which expenses belong to which property. And it also protects your personal assets. Plus, if the IRS audits you, you'll be in a much better shape with clear records. Up next, let's talk about setting up your books correctly from the start. And this brings us to tip number 2, set it up from day one. Now, you can use spreadsheets, QuickBooks, or purpose-built software like Landlord Studio. Whatever you choose, your expense categories should match IRS requirements. And your software should make it easy to run reports. Landlord Studio, for example, has preset categories aligned with the Schedule E tax form, so it means you can track your finances by property right out of the box. Now, let's come to tip number 3, mortgage payments. Mortgages can be quite tricky, and you need to split each payment into these 3 components. The first is mortgage interest, which is deductible. The second, principal, which isn't. And then finally, property taxes and insurance, which should go into escrow. Now remember, escrow deposits aren't deductible until they're spent. Tip number 4, let's keep things simple. Now let's talk about simplicity. 2 strategies. First, automate and use bank rules. Sync that bank account to reduce manual work errors. And then 2, be consistent. Set a regular schedule, whether it's weekly or monthly, to update your books. Trust me, you don't want to scramble for receipts at the end of the tax year. Let's jump into tip number 5, and this is all about tracking your income. Don't forget to track your income. That includes rent, late fees, and any other tenant charges. Now with Landlord Studio, tenant payments are automatically recorded for correct property and leases in the software. And at tax time, you can just generate an income report and then send it to your CPA. Tip number 6, ditch the paper receipts. They're hard to organize, easy to lose, and they fade over time. But IRS rules does state that you need to keep these on for at least 3 years after filing. So save your hassle and go digital. Landlord Studio lets you snap a photo of any receipt and then log the details automatically. Alright, tip number 7, this is all about depreciation, and you shouldn't sleep on this one. Depreciation is one of the most powerful tax deductions for landlords, and it's often overlooked. Calculate it correctly for each property, especially if you've made improvements. But it can get complex, so you should consult your CPA to make sure you're doing it right. Alright, finally we've made it to tip number 8. Regularly reviewing your financials. Now, good bookkeeping reduces your tax liability and helps you track property performance. Some landlords rely solely on their bank balance, but that just won't cut it once you have multiple properties. Now, with accurate records, you can make data-driven decisions to improve your profits and ROI. And Landlord Studio offers over 15 CPA-approved reports like the P&L, cash flow statements, which you can download with a single click and then share it with them. Now, before we wrap up, here's a quick reminder. If you found these tips helpful, hit the like button and subscribe for more property management content. And if you want to try Landlord Studio for free to simplify your bookkeeping, rent collection, and reporting, then click the link in the description below. Thanks for watching. I'll see you in the next video.